right. Good morning, everyone. Thank you for attending today's webinar. The topic today is legal and accounting implications of COVID-19 for your strata. A few housekeeping items before we jump in. The chat is open. In the interest of being efficient, we will take questions at the end of the session, but please feel free to enter your questions throughout as we go through. We will be sending out a copy of this document, or of a recording of this session at the end to all attendees, so please stay tuned for that. And also, everyone will be muted throughout the session, so the only method of communicating with us is through the chat box, so please feel free to do so. Just jumping in, I'm going to start by telling you a little bit about Enkel. So Enkel is a Vancouver-based back office services provider. We've worked with over 300 businesses and not-for-profit organizations across Canada since starting 5 years ago. We provide outsourced bookkeeping and accounting services in these 5 categories. So bookkeeping, payroll, accounts payable, accounts receivable, and controllership services. We work with businesses in a variety of industries, including many not-for-profit organizations, strata corporations, and technology companies. So a little bit about myself. I am the CEO and co-founder of Enkel. As I mentioned, I started the company 5 years ago. I have over 13 years of experience working in tax and advisory. I currently have the good fortune of getting to work with companies in Canada to provide them with accurate bookkeeping and reporting services. Of course, that's in addition to all of my other day-to-day CEO duties. I'll now pass it over to my co-host today, Lisa.
Hi, thanks, Anwar. So I am a real estate lawyer. My focus is on strata. I've been working with strata corporations since 2012. At the beginning of my career, I focused more on representing strata corporations in the middle of their lives. And now with Lawson, we have a greater focus on sort of the creation of strata corporations, and then in the event that they need to be wound up, sort of the end of their lives. So it's been an interesting journey. Lawson's been around since 1886, but the most interesting fact that I can tell you about Lawson is that our internal staircase was actually the set of the pilot of The Good Wife. So
interesting. Did not know that, Lisa.
Perfect. So just by way of a brief agenda for today, we're going to be focusing on some of the challenges that were faced by strata corporations in 2020. It's been a rough year for everyone, obviously, but stratas were facing their own unique brand of challenges on top of COVID-19 and dealing with what that meant on a day-to-day practical level. They were also facing some serious rising insurance costs. Premiums and deductibles went up across the province, anywhere from 30 to 40% for a good situation, up to some horror stories we were hearing 300 or 400%. And some strata corporations actually were facing being left without any insurance at all. So that was one of the big challenges outside of COVID they were facing. Budgeting challenges, obviously, you know, something that's a problem in any year, and given some of the things facing in 2020, this was also an even more important tool. And tips for online meetings we also wanted to talk about, because stratas also had to find a way in 2020 to keep going, meeting their statutory obligations while also trying to meet the social distancing requirements. So we'll talk a little bit about online meetings and some strategies to keep the wheels turning, as it were. So I think I already kind of touched on these. These are the challenges of stratas in 2020 that I'm going to talk about: insurance, budgeting, and holding meetings during COVID-19. And Elmer is going to do a more focused look at strata budgeting and some of those best practices as well. Perfect. So planning ahead for 2021, luckily in the insurance field at least, there's been some legislative assistance that's been passed and is on the horizon. And there's also some practical steps that the strata corporation can use. And this is sort of going to be more of the focus of my talk, is the government's obviously stepping in to try to do what it can, but there's also some on the ground things that the strata corporation can do outside of government assistance that can help face the insurance challenges. Perfect. So measures to combat rising insurance cost. So there was a report that was done in the summer looking industry-wide at some of the problems that were facing stratas and some of the solutions that could be implemented at the legislative level. So two of the things that the government brought into force in August of 2020 that are helpful is a requirement of strata corporations to inform owners as soon as feasible of any change in the strata corporation's coverage. So it was very common until recently that the insurance broker wouldn't send over a quote for next year's premium until a couple days before the previous year's insurance was set to expire, which really didn't give the council much time, and then the owners much time to approve what was going to usually be a small increase, but in the last little while has been a massive increase. So now the rules have changed slightly where the brokers are required to give notice in advance, and then the strata council is required to let the owners know far enough in advance that they can actually look at other options if necessary. And they've also allowed stratas to kind of allocate operating fund or contingency reserve funds to pay for increased premiums if there's an emergency. And this arose out of a few stratas, and they weren't even old buildings. One of our clients was actually the property manager for a couple of these buildings where they were days away from not having any strata corporation insurance at all. So now in the case where there's an emergency situation, the council can actually get the insurance in place and then have the meeting. There's also a few upcoming measures that the government plans to bring in force over the next few months. I won't go into too much detail, but there's going to be some increased clarity into what kinds of insurance the strata actually has to provide. There's going to be some protections. Now we've seen deductibles for water damage that can go up to $250,000. So if you have some kind of dishwasher overflow and that water leaks into a bunch of other units and there's that much damage that's caused, you could be personally responsible for that, even if there was not really something that you did to break the dishwasher, just that your dishwasher happened to break. So the government is looking at how much is too much to make individual strata owners responsible for. And they're looking at whether or not it might be possible to allow stratas to get less than 100% coverage. Currently, all stratas must have 100% coverage at all times, which we'll talk about later as sort of how that produces a challenge, but that's one thing that they're looking at. They're going to strengthen depreciation reporting requirements. We'll talk about depreciation reports in a minute, and maybe look at increasing contingency reserve contributions by the owner developers and then later by owners. This is actually a change to the other regulatory regime, not the Strata Property Act so much, but basically eliminating, and this was not the practice of all strata managers, but some strata managers were actually getting referral fees for encouraging their stratas to use particular insurance brokers, and that practice is going to end. And in the latest development in this, a few days ago, there was an announcement by the strata insurance industry that they were going to be ending a practice that came to light as the media and government organizations started looking into how strata insurance was actually done. One of the practices that was occurring was called best terms pricing, which sounds good, but the idea being that if there was one insurer that was willing to provide 85% coverage at one rate, and another insurer that was willing to provide the 100% that is required by legislation, but at a much higher rate, what the brokers were doing was picking the higher rate for the entire value of the building, rather than looking at perhaps obtaining 80% from the one that was at a cheaper rate and then just purchasing that additional 20%. So the industry has announced that that practice is going to be ceasing by the beginning of January. So that should help. But notwithstanding the legislation, there are things that the Strata Corporation itself can do to try to address some of these issues and reduce their premiums and deductibles. So we're going to look at a particular example, beautiful building here, NW1234. As you can see, there's some cracks in the facade there. So you can see why the insurers might be concerned about replacing this one. So imagine that you're a council member on NW1234 and you've just got an insurance quote and it's 300% of last year's insurance quote. What can you do about it? So I'm not going to talk about this too much. If it's extreme, if your building is facing special levies, and this is the case for, typically stratas that were built in the 1970s and 1980s that are in zones which are designed for multifamily, for densification, and they may be facing special levies of $100,000 per owner, or significant repairs that need to be done. It may be worth looking at doing a strata windup and actually selling the building to the developer. So that's one option. If it's really bleak, you can look at perhaps what opportunities are there for the strata to do a windup. If not, there's some bylaw improvements that can be made in order to kind of help at least recover some of those deductibles and make things a little bit easier for the owners. So that's one option. And another thing that we have seen be quite successful is coming up with an insurance review committee. Council obviously volunteers, lots of commitments, and with the extra time that strata should have now to find out about increased premiums, they can use that time to have a few people who can focus on getting new quotes, making inquiries, checking out experts, seeing what can be done about the building to improve that rate. So that can free up council and can help owners really understand that it's not that the council is not doing what they can, that it's sort of, everybody needs to pull together to try to come up with a solution. Perfect. So one of the other key things that can be done in some cases is repairs and maintenance. So in the case of NW1234, they actually went out and they consulted an expert, and they found that they can make two major changes to their repairs and maintenance to reduce their strata insurance premium. So one was that they weren't actually undergoing annual fire alarm testing. So that would help reduce the fire risk of the building if they were to engage in that practice. The other one is that they had some leaking balconies causing water ingress, and that was resulting in a lot of water damage deductibles. So knowing these two things and being able to take steps towards fixing them would reduce their premiums. But I guess the question for the council is, what's the next step? So the first question to ask is, do we have a depreciation report? So a lot of older stratas don't like getting depreciation reports because they may, reveal, potential problems in their buildings. But strata insurers like them because they want to know, what's coming on the horizon. And as you'll see, there's a lot of benefits to having a depreciation report, legislative help to get repairs and maintenance done that needs to be done if you have one. So they would want to look at that. And another just small note in here, it would be helpful for NW1234 to have an annual budget line item for professional fees. Omar's going to talk more about annual budgets, but basically in the event that they need a professional to come in and take a look at one or two of their items, or if they need to retain a lawyer to deal with some of their other issues, then if they have that line item in their annual budget, then they can access it quickly instead of having to go to an annual general meeting or special general meeting to raise the funds. So those are two things that they can do right away to help them. And as I mentioned, if you have repairs identified, if those balcony repairs, for example, were identified in the depreciation report, then they can actually, the council can actually get those repairs done by majority vote, as opposed to a 3/4 vote, which if you've tried to get an expensive repair done at a strata meeting, you'll appreciate getting 3/4 support is often a lot harder than 50%.
Great. So jumping into budget challenges, let's start with some of the basics here. So why do budgets matter? Anybody who's ever dealt with a strata will have heard of the budget. Really, strata fees are calculated based on the expected budget for the year, and budgets directly impact what strata owners will pay. That's why everybody's so concerned with them. Also, a strata corporation must have a budget under the BC Strata Property Act. But very importantly, the budget forms the longer strategic plan for your community, keeping it financially healthy for years to come. That is why so much time and energy goes into the budget, and that's why really it's such an important document. So some of the basics of budgeting, really it's important to know a little bit about the different elements that make up the budget. So what is an operating fund? I really like to think of the operating fund as the everyday income statement or P&L for an operating business. The operating fund is used to fund common shared expenses that usually occur either once a year or more often than once a year. So some examples include annual insurance costs, as Lisa has gone into detail, fire alarm testing, as per Lisa's example of NW1234, weekly cleaning, seasonal landscaping. Also, think of the budget for professional services costs that Lisa also mentioned. That would be included in the operating fund. So the contingency reserve fund. What is a contingency reserve fund? I like to think of it as the reserve that you put in place to take care of balance sheet items. Really, the contingency reserve fund is used for common expenses that usually occur less often than once a year or that do not usually occur. So examples are really those big capital expenditures like roof replacement, elevator upgrades, building envelope repairs, etc. So contributions to the contingency reserve fund are to be made in consideration with the depreciation report. And just for clarity, the depreciation report provides detailed estimates for maintenance, repair, and renewal costs over the long term, over a 30-year time horizon. So some important elements that a budget must contain. So of course, first of all, the opening balance in an operating fund. So the surplus or deficit from the previous year. And for deficits, the budget must identify how the strata will overcome this deficit in the current year. Second, the opening balance in the contingency reserve fund. So it's always good to see what the strata has in its so-called rainy day fund for big planning or big planned renovations. And then third, estimated income from all other sources other than strata fees. So itemized by source, some of these, can really help to offset the cost of strata fees, laundry, parking, etc. So of course, surpluses are great, but what keeps your strata up at night is a deficit. So a budget deficit occurs when the actual expenditures exceed the contributions to the operating fund for the previous fiscal year. Under the Strata Property Act, a budget deficit has to be eliminated during the next fiscal year. So this can happen in a few ways. One, by raising strata fees or approving a special levy, or spending money from the contingency reserve fund, which does, by the way, come with a 3/4 vote requirement. So that won't be an easy feat for the Strata Council. So other items to look at in the budget, list of expenditures from the operating fund. And this is something that we found that strata corporations can struggle with. So how granular to go, what to show, what not to show, how much you can just bucket things. And it's really important to get that right from a transparency perspective. Also, total of all contributions to the contingency reserve fund with consideration to the depreciation report. If there is one, hopefully there is one. And of course, the estimated balance in the operating fund and contingency reserve fund at the end of the fiscal year. All right, so how are budgets approved? They're approved through majority vote at the AGM. The proposed budget can be amended by a majority vote during the AGM before the final vote to approve the budget. And owners need to be informed of new strata fees within 2 weeks of the budget being approved. Of course, that's the piece that owners care about the most generally. So if the budget does not get approval, what happens? So the Strata Corporation has to prepare a new proposed budget. And the new proposed budget must be approved by majority vote at a special general meeting within 30 days of the AGM. And owners will continue to pay the same monthly strata fees until the new budget is approved. So some best practices for stratas in terms of finances. So given the trust that the owners of a strata place on the budget, really the following items here are really critical to ensure transparency. So first of all, accurate monthly reporting with budget versus actual spending, and a year-to-date budget to actual report. Also a budgeting system that ties in with the bookkeeping system. It needs, basically the budgeting system needs to be able to map the chart of accounts and the bookkeeping to the budget for a simple budget versus actual calculation. Also, maintaining receipts to support transactions. It's important to have these in case ever needed, in case any of the expenditures ever come into question. And then finally, dual signing authority on disbursements. That really does help to eliminate situations where there are questionable expenses, and that can create serious gaps in trust with the strata. All right. Over to Lisa.
Perfect. So a great tie-in here is that a very common thing that we have found during COVID-19 is that there seems to be a little bit of an increased mistrust of the Strata Council. The inability to have that sort of face-to-face interaction at the meeting, to have owners feel that they have an appropriate sort of forum to speak their minds, has led to a feeling of a lack of transparency. So, and there currently the regime in BC allows any owner to make an application to the Civil Resolution Tribunal. I think the filing fee is about $100. And then, so any sort of feeling, whether it's real or perceived, that the Strata Council is not being transparent can lead to CRT filings and a mountain of headache for the Strata. And as it stands, the Strata Council is forced to respond to every single one of these claims, whether there's merit to them or not. So, and getting sort of difficult resolutions passed, nobody wants to spend money. So getting that buy-in and having owners know from the outset that the Strata Council is doing everything they can to be completely transparent, getting the proper quotes, having those budget versus actual figures be correct. There's a number of times where, if there's those small kind of mistakes, they can be perceived by owners that don't have that trust as, there being something fishy going on, whereas really it's just a lot of work for the Strata Council to maintain what is really a professional level of accounting standards as volunteers. So doing those things right from the beginning can go a long way to build that owner trust and avoid a lot of headache down the line. So speaking of avoiding a lot of headache down the line, I'm going to talk a little bit about special general meetings, and this applies to annual general meetings as well, but more special general meetings because those are going to be the meetings that are generally more contentious if you're trying to pass, a balcony repair, expensive balcony repair resolution or something like that. So in the world of COVID, obviously, for a long time there was a 50-person restriction. Currently, there is a best practice by the Ministry of not having gatherings, although meetings to some extent may be exempt. That being said, to have 65 owners show up at a hall would not be a recommended practice that we would recommend for obvious reasons. We've tried to have those meetings where everybody, the chairs are 6 feet apart and people are sanitizing and, microphone, people speaking at the microphone in front of masks, and it does become, quite an unwieldy prospect, and it's not clear that that's even allowed at the current time. So what the government has done is they've actually allowed all strata corporations to hold annual general meetings and special general meetings online if necessary, even if there's no specific provision in the bylaws. So we'll talk in a minute about sort of some best practices for, having those meetings in COVID times. But one thing I wanted to mention first is that because of that lack of interaction and face-to-face contact with Strata Council, one thing we recommend, especially if there's going to be a contentious, matter that's going to be discussed, is having a town hall in advance. because the voting at an online meeting is quite unwieldy, or if it's done by proxy, owners don't feel like they have that opportunity to ask questions and be heard. So having an informal Zoom call with owners are able to talk and ask questions, maybe not during the actual voting meeting, which can get like quite unwieldy, trying to hold them online, but to have a town hall where everybody can speak their mind and work out those technical issues before the SGM, it often goes a long way. We like to set up email addresses. If there's a specific project, balcony replacement nw1234@gmail.com. And then owners can submit on their own time, especially if they have technological challenges. They can, get somebody who's more technologically proficient to help them write an email on their own time, rather than having to be, hooked up on a video call at 7 p.m. on a certain date. They can provide those questions in advance. Those questions can go to the necessary experts, and the council can be ready to answer those questions. At the meetings themselves, another thing we found is very successful is creating slideshows or online media that showcase the need for repair, to visually see those cracks in the building, or what the water damage looks like from somebody's balcony, can really help get that buy-in that it may be difficult to get during the current online setup. So have those videos available, have pictures available, provide quotes, and all of the other measures of transparency that Omar talked about. Be transparent with the budget and what it's actually going to cost, and so owners understand why, maybe if it has to come by special levy instead of out of the CRF, why, what other things do we need to pay for from the CRF, what are our other expenses, so that they feel that they are taken along the decision-making process. As I mentioned about, create an email address to collate questions for contractors, rather than having all of your owners emailing them directly, which can get expensive. Like I said, there is an ability to hold meetings online, even if you don't have a specific bylaw, but you may want to look at creating a bylaw that sets out how your strata wants to deal with online meetings. One of the problems is that it's very difficult to have a secret ballot in an online meeting. There are some voting packages that are out there. They're generally expensive, that may allow for each owner to get an anonymous code and have some record, but typically it's quite difficult. So it may be that you may have to let owners know in advance there's not going to be a secret ballot. The most popular method I've seen is something called restricted proxies, in which owners will, get already a proxy that has the resolution, yes or no, or whatever it may be, and then send that in advance. And then they don't have to attend the meeting. But on the other hand, we have had some questions about, well, is that now a strata document, and that's a public document and everybody's going to know the way that they voted? So maybe something that you want to look at what the other potential options are. One thing that we've seen is basically a socially distant poll, where you can hold a meeting where there is a physical ballot box downstairs. And so it could be, like between 7 and 7:15, strata lots 1 through 10 can go down and, go and cast their ballot and keep moving, so that nobody's stuck in the sort of, same area for any given time. Or it may be that it's as simple as doing a call of the roll. Strata lot 1, how do you vote? Strata lot 2, how do you vote? Strata lot 3, how do you vote? So thinking about what's going to work best for you in advance of the meeting is definitely important. And just one final caveat. There was a practice at the beginning that was quite common in stratas, where the council would physically sit together and hold the meeting and everybody else would participate online. And there was a decision of the CRT that came out that said, hey, that's not fair. Council members are no more special than anybody else. So either there has to be a physical place where everybody can go, or everybody has to meet online. So if council members want to log in together from the same, meeting room, that's not an issue, but the meeting should be held online. It shouldn't be something that, the council gets to participate in and everybody else is just a spectator. So being a little bit careful about those things and letting owners know can go a long way to getting your SGM a success.
Great. So we are at time. We do have a couple of questions, but what I think we'll do is we'll stop here. Please feel free to put your email address in the chat box and we will respond to your questions. Otherwise, please do feel free to reach out to Lisa or myself and we'd be happy to take your questions. Thank you.
For sure. Thank you.